Hey everybody, I'm going to go over a basic tutorial over time frames as well as the MACD. So this is going to help you be able to predict when the best time to buy and sell a stock or crypto typically is. There's other things that you need to know, and then pairing these indicators with others makes things very powerful. And that's really what I teach in my Patreon group. But first, we're going to go over the MACD. I'm going to explain the basics. If you just learn some of the basics, you can do a lot better than the majority of people that trade stocks over time. So you want to go to indicators and then go to moving average convergence divergence. It's called the MACD for short. Okay, so we're looking at Bitcoin right here, but it works on all stocks. And then we're looking at the monthly chart. You see this month, you can change time frames to months, 2 weeks, 1 week, 3 days, 1 day. But first, we're going to look at the monthly. All right, so if you can't see all of this back here, it's just because it's pinched. You can go into it and then zoom in, right? Okay, so we're going to take a look at one of Bitcoin's first cycles. Its second cycle, I believe. All right, so you don't see a whole lot of data here because it's new, and this is a monthly chart. If you looked at like a 1 week chart, you'd see more happening over here, but it just started, so you have to see over time it starts to grow, kind of. So if you just look at price action, right? So this is the top of Bitcoin in 2013 at $1,200, right? You wouldn't have known that it would have topped until August 2014. So whenever it crosses to the downside, that means a whole bunch of momentum is starting to be pushed to the downside. So you know you have a long ways to go before it crosses back up. So that's a really bad sign the majority of the time, right? But whenever you cross back up, bull market's back on for the most part. There's more to it, but if you just took that into account and you just bought whenever this crossed on a monthly, you would pick a pretty good entry to buy, right? So $385 is when you would have bought, and it went up 5,000% from that point. Now, if you go back over here, this is probably the cycle we're going to look at a little bit more. Right, you could have just bought back here and then sold when it recrossed down here, and you still would have made a couple thousand%. Now, you would have missed a lot, right? You would have sold late, you would have bought late, but that's why different time frames come into play too. But this is a zoomed out, bigger picture perspective on how to use the MACD. Now, after you've crossed here, you didn't cross back up until you were at $10,000, right? And then price fell 70%. Now, this is where it's important to pay attention to other indicators, but this is just kind of the gist of what to do here. But if you just bought at this cross on a monthly, let's put a line there at $10,000, and you would have sold at this cross over here, you would have made somewhere around 400%. It's not too bad, right? Over time, it's going to diminish, right? Your profits are going to diminish since it's a new technology, but you can do this with Tesla, you can do this with everything else. Okay, now let's look at this next one. This was a pretty good one. It crossed right here at 30,000, and then it crossed down right here at 90,000. So if you would have just bought there and sold there, you would have made somewhere around 300%. Okay, so that's a pretty significant way to make profits every 4 years on BTC. Currently, it's played out that way, and a lot of stocks do the same thing. Now let's actually look at, I'm going to keep these lines on here. Now this is what happens whenever you go to a smaller time frame. Okay, let's go to something like the 2 week. Right, the crosses all look somewhat different. They cross a little bit sooner. Okay, if you look right here, see if you can see that. This is where the monthly crossed, but this is where the 2 week crossed. It's closer to the bottom. Okay, it's still not the exact bottom, but it's pretty close. And then it also crossed a week sooner. So you would have got out a little bit sooner if you would have followed these crosses. But they also have fake outs. The lower the time frame, the more fake outs that you have. Okay, if you looked over here, you had a cross here, so you would have bought at 17,000 or so instead of 30,000. So you would have got 100% more if you would have watched this 2 week chart. And then you also would have sold a little bit earlier on this one. So you want to always look at a monthly time frame to kind of gauge when the cross might happen, and then look at smaller time frames to pick your entry. Now let's look at a 1 week chart. I normally look at the monthly, but I don't make huge decisions on the monthly. I'll make decisions based on the 2 week and the week, and then the 3 day as well. If you don't have a 3 day, it's because you're not paying for TradingView. If you pay for TradingView $15 a month or so, you can add specific days. Okay, so let's look at the 1 week. Now the 1 week is going to have more fake outs, right? You had a cross, if you can see this, let's see. You had several crosses down here before a 50% fall. If you use a measured move, it's 46% fall. So if you would have bought on these weekly crosses, it wouldn't have did you much good. It would have been helpful if you would have sold right up here, right, on this weekly cross, because it predicted the top, but these didn't really predict the bottom. Now, again, you want to pair other indicators with this as well, so you can make a higher probability entry on your buy orders. And that's what I teach in the Patreon. I do that with Bitcoin, I do it with cryptocurrencies in general, but everything that I teach in there can be used with stocks as well. Okay, so if you want to pick just a measured move, if you wanted maybe a smaller percentage gain, a lot of the times you can do that whenever it crosses on a weekly. Like for example, if you look right here, you crossed right here, and then it continued to go up. You had a fake out, but until it didn't cross back down until about right here. So if you would have bought only on that cross and then sold up here, you would have made 600%. There was a fake out there, right? And that's, sometimes you can have those. But that is, again, why you pair it with other indicators. I wouldn't just rely on the MACD. However, if you don't know much about charts, the MACD is a very, very helpful one to predict momentum. And depending on how far the lines are, the larger the momentum to the downside is. Okay, the longer the time frame, it's mostly going to go down, and price will probably fall a little bit faster. So if you can look, there's a large gap right here. It means that it's going to take a lot longer for it to recover, to repass through. Okay, that just tells you there's a whole bunch of momentum in the market. When it's crossed to the upside and it's not that gapped away, it's just a slower move to the upside. Like if you look here, it's just a slow grind to the upside. But once it's spread out quite a bit, then it explodes to the upside. Spread out quite a bit, explodes to the upside. And then you could do this on the daily to pick your entries as well. like if you zoom down to the bottom of BTC in 2019, the bottom of BTC did start printing these green histograms right here. However, there was divergence, and that's what I teach in the Patreon. That's something that you need to pay attention to. You normally see divergence on a bottom or a top. It's not always the case, but it's something that you need to be cautious of. However, if you would have bought here, you still would have been in better shape than waiting for the monthly and buying way up here. Right? So you would have bought here, even though price would have went down a little bit, but you would have made 130% more than waiting for this crossover here. Okay, then you also wouldn't have had been down in your position over here. There are more fake outs, right? If you look at a daily, you have a whole bunch of crosses. And all of these were not bottoms of BTC. And that's why you look at the other longer term time frames to where you can judge, okay, those look pretty good. Now let's source the exact bottom or fairly close to the bottom. Alright guys, that's all I've got for today. I've kept it pretty short. Hopefully there's some value there. Check out the Patreon if you want to learn more. I teach everything about crypto for the most part, and then I get into stocks a little bit. We do teach all different types of indicators.